What is up, fellow traders? This is the Wolf with Wolf Trading, and I would like to introduce you guys to a brand new series called Sunday Fundies. Basically, we're going to take a little bit of a deeper dive into fundamental analysis, crack the books on some of these small cap, low flow companies, and let's see what makes them tick. Let's see if we can time when they're going to raise, when they're going to dilute into the market. And I think now is a good time to release a series like this because we're starting to see some additional strength in the second month. Tomorrow is the second month of the second quarter. Last week, Monday was Memorial Day Monday. We had a little bit of a sentiment shift then, I believe. If you remember, a week prior to that, we were getting direct offering after direct offering. We had China stuff going on with the Trump and dump. We had a lot of stuff going on. The market was weak. Now we're starting to see, as of Tuesday, a lot of after-hour runners, sentiment shift. We're getting that extra leg up, the extra 2 or 3 waves out of it. And it's just a good time for us. It's a good time to be in the market right now, I think personally. So this series is going to be a fundamental analysis series. Just real quick, basically, we're going to go over the cash that these companies have, how much cash are they spending. It's going to give us a cash runway model, current assets, liabilities, net working capital, Q ratios, accumulated deficit, and I like to personally know how many full-time employees these companies have. That gives me a model for the debt to employee ratio, which is something that I just kind of get a feel for. I like to know if this company's $500 million in debt, they have 3 employees. That gives me a little bit of extra conviction that I need to take it down. So let's just go ahead and jump right in. I use BAMSEC, B-A-M-S-E-C, as you can see pictured. Great tool. They have a paid service. I use the free service. It's just a great tool in my opinion. A lot of popular traders use it as well. So you can see on the bottom right, here's the runners that we had last Friday. GNCA, DMPI, SBOT, I believe, is still up. ELTK is a day 3 runner. Monday will be day 4. SOLY, Monday could be a projected day 5. Here's the runners that I'm going off of in our runners room right here. We post all the runners every day, 5 o'clock. We're gonna put the runners in this room. Okay, let's just get right to it. So let's pull up SOLY. It's a little bit of a larger cap, but people might be more familiar with this one. So we're just gonna go ahead and put that in. So we're gonna pull up the 10Q Q1. So we're going to be looking at the books as of April 1st, 2019. I plugged this data into Google Sheets. I have some formulas and stuff like that, working with some guys. We're trying to develop a little bit more of a fundamental edge. A lot of traders say there's no edge in fundamentals. I can't agree or disagree with that, but what I can say is I believe, in my opinion, that without fundamental knowledge, you may be at a disadvantage. I think that I agree with that more than saying that there's just direct edge in fundamentals, especially when it comes to the dilution process and a lot of other things that we won't get into today. I don't want this video to be too long, but let's just go ahead and pull up solely SOLY. First thing I want to look at is the cash, the consolidated or condensed balance sheets. That's usually at the top. Sorry, I just cruised through that. Especially on the 10Qs, it's going to be the first blue and white line that you see. These lines are going to be your friends. They're going to get burnt in your eyes, right? So I want to see how much cash does this company have. 4.8 million. Make sure too also that you double check the date, especially in the beginning when you start to log data. You don't want to have to go back because December was on this side and March was on that side. It happened to me. I learned the hard way. But just a little tip right there. So 4.8 million, we're going to log that right here. Start a little profile on the company so that you know where they're at, where they're at financially. So this is cash on hand. Next thing I want to know is current assets. So with current assets, usually right underneath, you're going to see current assets. And you're also going to see total assets. We're just going to go ahead and use current assets. Real quickly, the difference between that is current assets, not total assets. current assets can lead to their conversion to a cash value over the next 1 year period. So I want to know, how liquid can this company get in 1 year? Same thing with the liabilities. What's their 1 year projection of debt? So here we go. Current assets, 5.2 million. We're going to copy that. I'm going to write that down. We're just going to build a little profile right here. Bear with me, guys. There's going to be a lot of information. We're going to plow through it. So first thing off the rip, I'm thinking, okay, this company is cash heavy comparatively to their current assets. We'll just keep rolling through. I'm not going to give you guys all the opinions right now. Like I said, I don't want this to be too long. Next one is current liabilities right here. I'm just reading through this. Accounts payable, we want that. Here we go. Total current. Another thing you can do is you can control F. Which is going to help you out. And control F, for those of you guys who don't know Google, control F, you can find anything you want to search for. Current liabilities right here, 1.9. And now I'm looking at these numbers as I put them in, and I'm building a mental profile. So this is going to lead us to the net working capital. Right, the net working capital is the addition of the current assets and the current liabilities. In this case, we're going to see a positive number. They're not always going to be positive. In fact, if you're a predominantly short seller, you want to see negative net working capital. You want to see negative Q ratios. You want to see negative everything. So I'm just going to do millions. Let's just do millions. It's going to be faster. So I use a calculator. We're going to do 5.2, right here. Assets minus liabilities gives us net working capital, right? So 5.2 minus 1.9, super simple, equals 3.3, positive, right? We're seeing a positive 3. All right, so we have a positive net working capital. Next thing we can do with the assets and the liabilities, we can come up with what's called a quick ratio or Q ratio, which is the assets divided by the liabilities. So let's just do it in millions to keep it simple. 5.2 divided by 1.9. And that's going to give us a positive. Anything over 1 is going to be obviously positive. Those crazy laws of division, right? So we're going to have 2.7, which means that this company has 2.7 or 270% more value of assets per grouping of liabilities. So 200%, 270% comparatively to 1 of the liabilities. All right. Next, I want to know accumulated deficit, right? So we're just looking down, total liabilities, stockholder equity is going to be right around here, right? There are net compliance rules with this, but we're just going to stick with the basics right here. Accumulated deficit, right? So accumulated deficit is the compounding of the total money since the point of inception, public inception of an entity. Basically, has this company profited or has it lost money since it went public? And what you're seeing is negative $45.5 million this company lost since it went public. So we're going to copy that. Accumulated deficit. All right. So I'm starting to get an idea of this company just from getting this information. The more you work with these numbers, the more familiar you're going to get with them, the more they're going to mean. You just got to put that screen time in. The next thing that we want to know is the burn rate. So we have the total cash on hand, right? Which is important. Now I want to know how much money is this company using to operate. So I want to look for the net cash used by operations. So that's going to usually be down in the balance sheets, the cash flow right here. Net cash used for investing. We want net cash used, cost of operations right here. Net cash used in operating activities. Okay. This is for 3 months. So $4.077 million this company is expending to operate for 3 months. So if I want to find out the current rate at which they're expending cash per month, I'm going to take 4 million and I'm going to divide it by 3 months. Right, so if this was a second quarter filing, it would be 6 months. Third quarter filing would give us a 9 month, which would ultimately give us a more accurate average. I always take a second glance to see the year prior. It's just going to give me a relative view of what they're doing. This isn't too far off, but if there was something where, say, this was 40 million and this was positive 10 million, if there was a huge gap relatively, I would probably go into the 10K and maybe even compare 2018 to 2017. But this one is a little bit off, but it's okay. So we're going to take $4 million. We're going to divide it by 3, which gives us 1.33 million they're burning per month. Okay, so that's going to be their cash burn. $1.3. Yeah, I should probably just keep these all same. So, and then if I want to project a cash runway, I'm going to take the total amount of cash they have on hand, right? So they have, right, $4.8 million of cash divided by how much are they burning, divided by their burn rate, which is 1.3 million. How many months until this company possibly needs a raise? 3.7 months. Right, so this is in effect as of April. Right, so April, May, June, July, end of July, beginning of August, these guys are going to need to raise. They're going to either have to change how they operate their company. They're going to have to figure out. Usually, they're just going to raise, and that's what we normally see. That's the whole point of this. I want to know how cash hungry, how cash desperate these companies are. So the cash runway is 3.7 months. Let's see. Next, I want to know how many employees they have. To do that, normally I'll check real quick, but normally I pull that off the 10K. So I'm just going to search for full-time with the hyphen. None. I'm just going to go back, bounce over to the 10K. Control F, right? Those are our friends. Normally full-time will pick it up with a hyphen. And there it is. As of December 31st, we have 8 employees, including 7 full-time employees. So I'm interested in full-time employees. So I'm going to go ahead and put that in. $7. So this company is $45.5 million in debt with 7 employees. 45.5 divided by every full-time employee is going to give me a debt to employee ratio. I've never seen anybody else do this. I just kind of like this number. $6.5 million. So these guys need to get to work, right? They're going to turn this company around and become profitable in the next few months. They have 3.7 months until they're out of cash. They have 6.5 or 7 employees who each represent $6.5 million of debt to this company. And this company is running strong, right? I'm going to go back into the runner's room. This is day 4. Let's see the first day it ran. Here's solely day 3 with the volume profile for that day, which I like. Here's solely day 2. Now we're looking at frontside volume profile, which is good. Look at this right here. And then let's look at the Tuesday. Did it run hard? I forget how hard it ran. Yeah, here's day 1. This thing is just so strong. This is the strongest ticker that I know of currently right now in small cap. So the volume is up there. This thing is strong. So that's going to give us a really good grasp of what's going on with that. Is there anything else that I'm missing? I think that's it. So sorry if this video got a little long, guys. Let me just pop up too. We do have a fundamental room, right? Where we go over stuff. This is the cash burn. This is off of BLIN. So we projected BLIN to have the cash on hand, right? X divided by Y being the cash burn, and Z, the months until potential dilution is needed, or they're just going to have to take out more debt, or however they're going to have to pay their employees, keep the lights on. Also, since I'm in the fundamental room, we have other stuff in here too, like BIOC. We caught BIOC running this year off of an S1, 410.19. They came out with an S1, and then you look last year, 515.18. They're working off an S3. So that's just something that we want to look into as a room. Also, too, if a company is IB5 or IB6 restricted off the MVPHS market value of publicly held shares, you can pull the non-affiliate public float off that too. Just a heads up on that, since we are talking about fundamental analysis. Here we're going back 517. We pulled the OTLK April 10th, 2019 delivery with these two underwriters. That stock is still currently right around that 275, 290 line where these warrants are at, right? Retail hedge with stock options, institutions hedge with warrants. In my opinion, this is all speculative information, but these warrants too have 2 separate sets of expiration. So we're looking at a 15-month set of warrants, and we're looking at a 5-year set of warrants, right? Just some stuff that we go through. Also, one of my favorite rooms is the motivation room. Every week we put some motivation up. We got a lot of good traders in the room. I'm opening up the room for open enrollment. It's a free room. We're just looking for other like-minded traders. Right now we have a decent amount of guys who are, intermediate. I don't even know what expert traders are, but intermediate, meaning 1 to 3 years. Even some newer guys are welcome to come in and just trade with us, bounce theses around, and ask questions. The more questions that an experienced trader answers, the more it's going to reiterate his setups and his style of trading. So, like I said, I'm going to open the room up. There'll be a link down in the description. Give us a join, man. Take a look and see what we're doing. We'd love to see what you guys are trading. We post charts, and one of my favorite things is every week we do a Saturday motivation, and this is a bit from this week's motivation. And I'll see you guys.
All right, what's the primary difference between winners and losers? The winners do it. They do it and do it and do it and do it until the job gets done. And then they talk about how great it is to finally have achieved something unique, and how glad they are that they didn't quit like everybody else, and how wonderful it is to finally be somebody they're proud of and make a difference with their life.